Cathie Wood.
Cathie Wood.
Or Cathie Wood.
Cathie Wood.
Cathie Wood's ARK Invest.
Call it the Cathie Wood effect.
Cathie's biggest ETF has returned well in excess of 100%.
Cathie Wood has had a very strong year.
Where she is one of the world's leading investors in innovation and disruption in the public equity markets.
In the world of Wall Street, where fortunes are made and lost in the blink of an eye, few names have sparked as much controversy as Cathie Wood. She's been called a visionary, a genius, and Wall Street's most dangerous gambler. This is the story of how a devoted Christian from Los Angeles became the most watched investor on the planet, how her bold predictions made her a household name, and how her revolutionary approach to investing changed the game forever. Catherine Duddy Wood was born in 1955 in Los Angeles, California, to an Irish immigrant parent who had crossed an ocean in search of the American dream. Her father, Gerald Duddy, served in both the Irish Army and the United States Air Force as a radar systems engineer. From an early age, Cathie was surrounded by innovation and technology. But it was her father's dinner table conversations about the stock market that would plant the seed for her future obsession. In 1974, she graduated from Notre Dame Academy, an all-girls Catholic high school in Los Angeles. Her path to USC wasn't just about education, it was about destiny.
Having been born the child of immigrants in the United States, I was very fearful as I went into college that, I was the oldest and I had to carry the mantle for the family. And so I approached it with a great bit of trepidation.
At USC, studying finance and economics, Cathie encountered a professor who would change her life forever. Arthur Laffer, the economist who advised President Ronald Reagan and Donald Trump. Laffer's revolutionary ideas about supply-side economics and the power of innovation to drive growth would become the foundation of everything Cathie Wood would later build.
There are two tax rates that give the same amount of revenue. There's a high tax rate and a low tax rate. No country should ever want to be in that high tax rate range. I mean, why would you ever want a tax at this point where if you lowered tax rates, you collected more money and you have more output, employment, and production? So this is the Laffer curve, which really brings together the debate about taxes.
He was my mentor at USC, University of Southern California, and he's a very well-known economist, Austrian school, he's been a wonderful mentor.
In 1981, she graduated, but her real education was just beginning. In 1977, fresh out of college, Cathie Wood landed her first job as an assistant economist at Capital Group in Los Angeles. For 3 years, she immersed herself in the world of economic forecasting and market analysis. But Los Angeles wasn't enough, and in 1980, she made the move that would define her career: New York City. At Jennison's Associates, she wasn't just another analyst. She was a rising star.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
The 1980s were a time of economic transformation. Interest rates were sky high, inflation was crushing the economy. And when the legendary economist Henry Kaufman predicted rates would stay high, most of Wall Street listened.
I want to work in Washington to roll back the crushing burden of taxation that limits investment, production, and the generation of real wealth for our people. A job and savings and hope for our children is part of that dream.
But not Cathie Wood. She publicly debated Kaufman, arguing that interest rates had peaked, and she was right. And Wall Street took notice.
And that's where I learned about, wow, if everyone is going in that direction, and back then it was inflation and interest rates are embedded in the system at a double-digit rate. This is the early 80s.
Right.
And someone dares to go the opposite way after those who had gone the opposite way had been bludgeoned.
For 18 years at Jennison Associates, she climbed the ranks. Chief economist, analyst, portfolio manager, managing director. And by 1988, Cathie Wood had proven herself as one of Wall Street's sharpest minds. But she wanted more than just success. She wanted to build something revolutionary. And when partner Lulu C. Wang, she co-founded Tupelo Capital Management, a hedge fund based in New York City. But the real test was coming. In 2001, she joined Alliance Bernstein as Chief Investment Officer of Global Thematic Strategies. She was managing $5 billion, and she was at the top of her game.
I did manage $5 billion at Alliance Bernstein prior to launching ARK. And we were very thematic in our orientation. We were a bit of an odd duck within that organization.
And then came 2008. The financial crisis that would test every investor on the planet, including Cathie Wood.
Bear Stearns was forced to take an emergency loan funded by all of us. Taxpayer bailout prompted investors to dump Bear Stearns stock.
As companies come under pressure, as they lose their short-term funding, they begin to dump assets, and that in turn created pressure on the stock market, which dropped very sharply, and other asset prices came down as banks and trust companies trying to raise liquidity were dumping assets on the market.
Her funds underperformed the market, critics emerged, and doubts crept in. But sometimes failure is just the beginning of something extraordinary. 2014, Cathie Wood walked into a boardroom at Alliance Bernstein with an idea that would change everything. Actively managed ETFs focused on disruptive innovation. Companies that were transforming the world through technology. The response was swift and brutal. Too risky. For most people, that would have been the end. But Cathie Wood wasn't most people. That night, she went home and opened her one-year Bible. She was reading about the Ark of the Covenant, the vessel that carried humanity's most precious cargo through the flood. And in that moment, ARK Invest was born. In January 2014, Cathie Wood registered ARK as an investment advisor. She was 59 years old. Most people her age were thinking about retirement. She was starting over. Her first break came from an unlikely source. Bill Wang of Archaeos Capital provided the seed money for ARK's first 4 ETFs. The ARK Innovation ETF, the ARK Autonomous Technology and Robotics ETF, the ARK Next Generation Internet ETF, and the ARK Genomic Revolution ETF. Cathie's investment thesis was simple yet revolutionary. 5 technology platforms would transform the world: artificial intelligence, DNA sequencing, robotics and autonomous vehicles, energy storage, and blockchain technology.
Allocating capital to its highest and best use in terms of increasing access, solving the world's problems. There can't be anything more satisfying.
While traditional investors focused on value and dividends, Cathie Wood was betting on the future. The early years were quiet, steady growth, building a foundation. But then came 2020, and everything changed. March 2020, the world shut down, markets crashed, and fear ruled Wall Street. The S&P 500 fell a staggering 34% in just 5 weeks. Investors fled to safety: cash, bonds, gold. But while others ran for cover, Cathie Wood saw opportunity. Tesla, the electric vehicle company that traditional automakers had dismissed.
Tesla is going to be the biggest.
You've invested just over $2 billion in Tesla?
Yeah, because Tesla is the largest AI project on Earth. So AI has to be a top priority, not an afterthought.
Zoom, the video conferencing platform that became essential overnight. Roku, as people stayed home, streaming exploded. The ARK Innovation ETF gained a staggering 149% gain in 2020. Bloomberg News editor-in-chief Matthew Winkler declared Cathie Wood the best stock picker of 2020. Suddenly, everybody wanted to hear from Cathie Wood. CNBC, Bloomberg, The Wall Street Journal. Her Twitter following exploded and retail investors hung on her every word.
I don't think there's a fund manager in this country that could get away with this kind of thing other than Cathie Wood.
I mean, it's funny, these different percentage chances she puts on things. A 25% probability Tesla could be worth $4,000 a share.
Unlike traditional fund managers who kept their moves secret, Cathie Wood published every trade, every day, complete transparency. Her Tesla price target seemed impossible, $4,000 per share before the stock split.
Meanwhile, Tesla bull Cathie Wood raising her price target $2,600 per share.
Could take the stock, get ready, to $4,000.
$4,000?
$4,000 if we're right, the bull case. The base case, it's a 5-year target, so the end of 24, it's $7,000.
Wall Street laughed at her, and Tesla hit the target. And even more so, kept climbing. Her Bitcoin prediction seemed equally outrageous. She called for massive institutional adoption, corporate treasuries buying Bitcoin. MicroStrategy bought billions. Tesla bought 1.5 billion. She was right again. And by early 2021, ARK Invest managed over $60 billion in assets. Cathie Wood wasn't just a fund manager anymore. She was a phenomenon.
You're having one of the best years in the history of professional money management.
But in the world of investing, what goes up must come down. 2021, the Federal Reserve began talking about rising interest rates. Inflation was rising, the free money era was ending.
That's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal.
And suddenly, the high-growth, high-valuation stocks that had made Cathie Wood famous became toxic. The ARK Innovation ETF fell 24% in 2021, while the S&P 500 gained 27%. Teladoc Health, one of ARK's largest holdings, collapsed. ARK's realized loss was over $1.5 billion. Ginkgo Bioworks, the synthetic biology company, lost $510 million. Roku, the streaming pioneer, lost $467 million. And Invitae, the genetic testing company, filed for bankruptcy and lost $453 million. And guess what? 2022 was even worse. The ARK Innovation ETF fell 67%. And Morningstar declared it the worst performing equity fund in Q1 of 2022. In just one fiscal year, ARK's flagship fund realized a $3.5 billion in losses. Across all ARK ETFs, a staggering $21.7 billion in accumulated losses. The same media that had celebrated her now turned critical. Wealth destroyer, dangerous gambler, lucky, not skilled. Cathie Wood's response was defiant. She called the losses underappreciated assets that would offset future capital gains taxes. Investors weren't buying it. Many had bought at the peak. Their retirement savings were decimated. And money began flowing out of ARK funds. The phenomenon was becoming a cautionary tale. But through it all, Cathie Wood never wavered. Her conviction remained absolute and her predictions grew even bolder. To understand Cathie Wood, you had to understand her philosophy. She doesn't just invest in companies, she invests in the future. Her investment thesis is built on Wright's law. As production doubles, cost falls by a constant percentage. Innovation creates exponential growth. And while traditional investors focus on earnings and dividends, Cathie Wood focuses on transformation. She believes innovation is part of God's plan. that technology can solve humanity's greatest challenges. And in 2025, ARK's funds have rebounded. ARK is up 23.4% year to date, outpacing the S&P's 6.8% gain. The AI revolution she predicted is here and now. Artificial intelligence is transforming every industry. And genomics is revolutionizing medicine. Gene editing is saving lives. So was Cathie Wood right? The answer isn't simple. Her long-term thesis is about disruptive innovation. And it appears sound. Technology is transforming the world exactly as she predicted. But timing is everything in investing. Being right too early can be just as costly as being wrong. The human cost is real. Millions of investors followed her into the markets at the peak. Their losses were devastating. Yet Cathie Wood remains unshaken, still making bold predictions, still believing in the power of innovation. Perhaps her greatest impact isn't her returns, it's how she changed the conversation. She democratized investing, made it transparent, and gave retail investors a voice. She proved that at 59 years old, women could start over, could challenge the Wall Street's old boys club, and could build something revolutionary. Cathie Wood's story isn't over. Time will tell if she's a visionary or a cautionary tale. But one thing is certain, Cathie Wood changed Wall Street forever. The future belongs to those who believe in it. Cathie Woods.